Imagine a world where you could predict the stock market's every move and make unlimited money. But is this even possible? Warren Buffett, finance legend and the richest investor, reveals that trying this is a huge mistake you could make. In our first lesson, Warren Buffett reveals the fallacy of timing the market. So, let's welcome our special guest, the Oracle of Omaha, Mr. Buffett.
Thanks for having me.
So let's get into this. What would you say about timing the market, Uncle Warren?
It just doesn't make any sense to try and time things that way. And the idea that you try to time purchases based on what you think this is going to do in the next year or two, I think that's the greatest mistake that investors make because it's always uncertain. It's uncertain every single day. So take uncertainty as part of being involved in investment at all. But uncertainty can be your friend. I mean, when people are scared, they pay less for things. And we try to price. We don't try to time at all.
And let me tell you something from my personal experience. I try to outsmart the market. I mean, everyone wants to buy low and sell high, right? So I put in a stop loss for my stocks. Means every time a stock falls underneath a certain value, it will be sold automatically through the platform. My goal was to wait as long as possible and then buy it again when the market is going upwards again. In theory, a smart move. But the nerve it costed me were high. I had to check my investments constantly to not miss out. Also, it amplifies the feeling of the stock market swings. Second, and on paper, it all works fine, but in reality, you never know when the market is going up again. You could miss out on huge jumps. So, I probably lost around $500 trying out this method, but let me prove it to you with the numbers. There's even a study I found on Reddit. I'll link it down below, which talks about 3 different investing timings. The rules were easy. Everyone invested the same amount into the S&P 500 over the same period. All 3 saved $200 of their income per month for 40 years, for a total of $96,000 each. Investor A, with the worst timing in the world, bought stocks before every market crash when prices were the highest. Investor B, with the perfect timing, bought after the crash when prices were low. And last but not least, Investor C, who bought every month, whether it's going up or down. And the results blew my mind. After 40 years, Investor A had $663,000 US, Investor B had $956,000, and Investor C had $1,386,000.
I knew exactly what to do, but in a much more real sense, I had no idea what to do.
Could you have guessed that Investor C would have $400,000 more than Investor B? So, don't stress over the timing and the news. Put your face into the US stock market. Just keep calm and keep investing till you reach your goal. Imagine another scenario in which you find the perfect formula for the perfect number in your stock. But what is your point of view about this, Uncle Warren?
When I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks. And I thought the first 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham and I realized that I was doing it exactly the wrong way. And from that point, I never bought another stock. I bought businesses. I did not care whether a stock went up or down the next day or the next week or the next month or the next year, and I didn't have any idea what it would do. I didn't know what the stock market would do.
I think it's safe to say that most of us did this in the beginning, focusing on numbers and charts, but we forget the most important thing. You're not buying a piece of paper, we are buying shares of companies. So you should ask yourself following questions. What is the company doing? How is the development? How are the politics? Are there any good or bad news? Can this company keep doing what they're doing now for the next 15 years? On to number 3. This one will surprise you. If we think about Warren Buffett, we'll think about investing in the stock market, but his number 1 recommendation is not the Coca-Cola stock or anything like that. He recommends to invest in yourself first, because it will help you in all aspects of your life. Buffett took classes in public speaking to help convince others to invest with him. Read, learn, and grow. Your abilities will always be your greatest asset, so you should focus on building new skills. Valuable skills allow you to provide value to others and open new doors to new opportunities. And remember, you can lose assets, but no one ever will be able to take your skills away from you. And that's why my channel is all about investing. investing in the stock market, the S&P 500, and in yourself, the SME. How do you think Warren Buffett became the richest investor of all time? Easy. He has been investing for 78 years. If you would put $100 in the S&P for 78 years, this is a total contribution of $93,600,000 US, you will end up with $21,386,000. All thanks to the compound effect. So time was in his biggest favor. He believes in buying great companies and holding them forever. But I'm pretty sure there are not many investors out there who started with 11. Like me, I started when I was 25. But don't let that discourage you. The best day to start investing was the day you were born. The second best day to invest is today. It's never too late to invest. It shows that having a long-term approach is helping us in reaching gains. And when Warren Buffett is having a long-term approach with 93, so can you. As mentioned before, a company can face many challenges in the short term. And there are challenges which are out of their control. One good example is Apple. The company that invented the iPhone and iPad and many more has faced many issues over the past 5 years, from tangled supply chains to weak demand for its flagship products. Yet, if you had held on to Apple's shares since April 2018, you would have quadrupled your money in the technology company. Let's see what the future holds up for Apple and what great invention they will come up next. To sum it up, time in the market is more important than timing the market. Let your investments compound and grow over time. Last but not least, keep it simple. Should you invest in crypto, real estate, stocks, gold, and watches? Invest what you understand. If you are in the real estate business, you should put your focus in buying houses rather than stocks. My stepdad is example. He is into buying and selling used cars. He has no clue about the stock market, so he keeps it simple and invests in what he understands. For example, if you don't understand cryptocurrency, don't invest, trade, or speculate in bitcoins. The same goes for NFTs, futures, options, penny stocks, Forex, commodities, silver, and the dozens of new, shiny, glamorous looking investment vehicles we're exposed to every year. Remember, financial freedom is within your grasp. By mastering these principles, you're well on your way to breaking free from the rat race and unlocking your true potential. And watch this video next to see which investment can outperform Warren Buffett's investment.